Wasabi wallet. I'm fairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we dive into everything, of course, shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a couple of different services, one of which is to stack more sats using their Bitcoin savings account. So the way it works is you can deposit and earn Bitcoin on your Bitcoin paid in Bitcoin. Also, they do enable you to obtain a US or Canadian dollar loan using your Bitcoin as collateral. Now, when you do this, it gets put in a dedicated account, an address that is auditable 24/7 until your loan is actually paid back. So if you want to check either of those out, there's a link down below. And actually, if you opt to get a loan, they'll credit your account with an additional $50 worth of Bitcoin. Secondly, if you're into Bitcoin, then privacy is a very important thing. And one of the things I use regularly on my phone, on my computer, is NordVPN. So what this does is it hides your IP address, it encrypts your browsing data, and it has a few other added benefits like unlocking geoblock content. So if there's something not available in your country, you can simply change your location and gain access to it. So if you want to check out them down below, there is also a link there that will give you access to the service for only $3 a month. With that, let's dive into the news. And holy hell, we've got a lot to talk about today. The IRS in the United States has just issued its first cryptocurrency tax guidance in 5 years, and god damn, it's a doozy. Full disclosure, I think this is incredibly poorly thought out and just an absolute clusterfuck. So let's dive into some of the key points. So I should point out that the first place I saw this was from Niraj, and he's from over at Coincenter. So I noticed this on Twitter and I started to dive in. But the most notable thing here is about forks. So in terms of what the IRS is referring to as a fork, basically anytime you're holding a cryptocurrency that results in you also obtaining the keys or the ability to move and buy or sell or dispose of in any way, shape, or form any other cryptocurrency, they consider that just a fork or an airdrop. They use not very clear language around this, denoting that they don't really understand how it works. So they refer to a fork resulting in an airdrop, which doesn't make sense. But basically, let's say you're holding Bitcoin and somebody creates another currency, but they've said that with your keys on Bitcoin, you can then unlock the currency on this other chain. Well, they consider that to be a fork or an airdrop or both. I don't quite know what they're going for here. But around forks, what did they say? Well, essentially, what they've said is that anytime there's a fork or an airdrop or something that results in you, even unknowingly, gaining cryptocurrency by holding something like Bitcoin, and think of how many friggin' forks or airdrops there's been on Bitcoin, that is considered income. It's considered income. Not only that, but the value of that income is the value of the currency at the time of its launch, at the time that it is first recorded on its native blockchain, that the blockchain comes into existence for that particular currency. Regardless of the fact whether or not you have immediate access to it, whether or not you have to compromise your existing private keys to access it, to send it, to sell it, whether or not exchanges have it listed so that you can sell it and there's a liquid market to sell it. The fair market value at the time of the existence of that coin is what your income is. So, there's some good questions that get brought up here by Jameson Law. He says today's IRS guidance is a hot mess. Number one, what if you have keys but no software from which to spend the asset, like if you're using a Bitcoin-only wallet? Number 2, what if you never sell or transfer the asset and it drops 90% in value? Like people who maybe got some of these airdrop forks, whatever you want to call them, and didn't even know about it and just never bothered to move them. How many people do you know that have Bitcoin that don't even know what Bitcoin Cash is? Number 3, what's the value if the asset isn't even trading at the time of the fork? Exactly. If there's no liquid markets that exist at the time of the fork, how do you value that? Number 4, what if spending your fork coins poses privacy and security risks that you want to avoid? Again, the point of what if you have to compromise your keys in order to access it, but you're worried about having income that you can't afford to pay the taxes on the coins that you didn't even want? Number 5, what if the fork coin has an artificially high value and no liquidity? Exactly. What if the founders, it's very restricted supply initially, and the founders allocate a bunch of the coins to themselves and then market dump, and it completely drops in value? And number 6, what if ain't nobody got time for that? 100%. So I want to back into this example. What about Bitcoin Gold? A lot of people, like I just said, a lot of people don't even know about Bitcoin Cash. What about Bitcoin Gold, which was another fork that happened in late 2017? And what was the fair market value or the recorded value at the time of launch? Well, it was it was damn near $500. Oh my God, Bitcoin Gold it was $480 roughly. What's the current value of Bitcoin Gold? Well, it's around $8, between $8 and $9. So, based on this guidance, anybody that was holding Bitcoin at the end of 2017 when Bitcoin Gold launched, for every Bitcoin you held, you would have had $480 worth of income per Bitcoin you held because Bitcoin Gold launched. And if you were unaware of Bitcoin Gold and neglected to sell it immediately, you're still on the hook for every $480 or every Bitcoin Gold that you received, and you have to pay income tax on that income. Even the people that got the fork and managed to sell it very quickly but still only got, it immediately dropped to like $150. You're still on the hook for $480 worth of income, which is fucking insane. And imagine the people that don't know about it, that it's now worth $8, but for those $8 that they can sell it for, they're still having to pay on $480 worth of reported income. It's kind of mind-blowing. And by kind of, I mean like completely mind-blowing. So, I mean, it went on to say some other things. The cost basis they're talking about if you bought Bitcoin, how do you know what the fair market value was at the time of purchase versus the time of sale, and what you need to pay in taxes on that? Well, they're saying it's literally just whatever you spent to get the asset. Now, there's some other stuff here. There's a really good thread from Crypto Tax Girl, and she goes through a lot of the different things, including what the forks are. Now, they also said that another big thing to note is that this is all done according to FIFO, or first in, first out. So some people, they were unsure whether taxable gains would be based on the exact coins, the particular coins that you're buying and selling, because again, Bitcoin is not fully fungible. You can actually see which tokens are which coins are which, and where they originated from. Whereas with a bank account, it's literally just there's a balance and that's it. And so whatever goes in first is what's considered to leave the account first. So with this, no, it's not based on the particular UTXO or the particular coin that you receive. So if you bought a coin back when Bitcoin was like $300, and you kept that until today, and then you bought a different coin today at today's value, and you had those in separate wallets, and you said, I'm going to spend the one that I just bought, does not matter. They consider that an expenditure of the whole of your assets and they say, well, you bought this one for $300 X number of years ago, you haven't spent since then, that's what we're pulling from. So we're going to count that capital gains from 300 to, 8 or 9 grand that it's at now. Yeah. The other thing here that seems interesting is again, in regards to the forks, disposal of the asset. It doesn't count also if you've burned the keys in any way and you can't access it, or it's been sent to a burn address and doesn't exist anymore. It's still income. So this then begs the question. So this was, I was saying that Niraj is from Coincenter. Well, they wrote kind of their write-up of what they think of this. They said there's a couple good things. Again, fair market value is cleared up. It's whatever you paid for it, which also doesn't really, it doesn't apply to the forks because that's just, I don't know how they're going to come to that. But anyways, also the accounting standards are verified as far as first in, first out. That's what they said. However, the forks, again, there's a lot of different things pertaining to this that are not great. They say that the hard fork and airdrop terminology is used incorrectly, which I already alluded to. There's so much here. I'm sorry that I'm stumbling over my words, but there's a lot to parse through here. And it can be difficult. It's also not super clear. So one other thing I wanted to point out is I was asking Jay Weatherman about something, or he brought something up that said that in fact it was not first in, first out, that it was going to be your UTXOs or based on that, or if there's not a sizable gain or loss, then it's immaterial. So he said, when I said, well, it looks like Coincenter is saying this is first in, first out, he said, want to bet they're wrong? Keep separate wallets for significant holdings. Don't sell those. Keep small balances for your buying and selling wallet. Never deal with anything because you realize gains. Your realized gains will not be material. So he said the truth is that a pedantic reading of the law is always absurd when it comes to tax law, but a good CPA can explain you can ignore anything that's not material. So he's saying if you keep your long-term holdings completely separate and just leave them, then your spending wallet where it's kind of coming in and coming out and you're just using it for whatever, if it's not a material gain, like if you're not sitting on it for years and then spending it on large ticket items, it's not likely to have any impact on you as an individual. So I've linked below to this, the IRS, the FAQ on virtual currency transactions. There's a lot there. I've also linked to the fork guidance, which specifies what they'd like, what they say the rules are. As I read it, it seemed like it was kind of first in, first out, and everything would incur a loss or a gain. And if you go over to their guidance here, where is it? Purchases. Let me just find it here really quickly. Paid by your employer, income, virtual currency, gain or a loss if I sell for real currency. Do I realize if I sell my currency for real currency? Oh, God. Basically, if you look through here, they say that if you make a purchase, then yes, it's considered to be a capital gain or a capital loss. There's also a note in here that they say there is not going to be any exemptions below a certain purchase value. So if you're doing small amounts of purchases, it still is considered a gain or a loss. So would they come after you for buying a coffee? I mean, we can speculate. I don't imagine that they have the resources to do that kind of thing. But technically, when looking at it, yes, that is a capital gain or a capital loss, and how you handle that, I guess, is your prerogative. But yeah, anyways, there's all the fork guidance here in a doc that I've linked down below. Let me know what you think, because oh my God. Like so I'm in Canada, and I look at this and really, like, best of luck. Holy Christ. The other thing to think about this as well is, does this now mean, like, let's take the instance of Bitcoin Gold. Does this now mean that anybody holding any cryptocurrency now has to constantly be on guard for any sort of fork moving forward, worried that if something launches that has any sort of value and they're not able to market dump it as soon as possible, they're going to incur income that they do not want to deal with, especially institutions that are holding large amounts of coin for other people? Are those institutions, are they going to have staff on hand keeping watch on everything, making sure that there's no airdrop that needs to be market dumped right away so that they can get the maximum amount back for their coins, because it's going to be considered income right away? Does this effectively kill all forks moving forward? I mean, if it sticks, kind of, yeah, because who the hell is going to want to hold on to a fork and bet that it's going to go up in value? As we've seen, that's not a trend that has been common, if at all, a trend at all. Really, I don't know, name a fork that's consistently gone up in value since its launch as a fork of a major coin. I don't know. Anyways, let me know what you think. I'm going to move on from this. I know it's a lot. I tried to explain it as best as I understand, but also I'm not an accountant, so parse through the information and let me know what you think. Did I get anything wrong here? Obviously, I'm a little unclear on a few things myself. Let's move on. Okay, from regulators to regulators and senators and government again, U.S. senators are now directly cautioning Visa and MasterCard on the risks of being involved with Libra and Facebook. So we talked about the other day, PayPal has exited the Libra Foundation, and senators are now saying, hey, you should be concerned. First of all, they're citing all of the shit that Facebook has gotten in recently, not regarding necessarily the currency that they're trying to launch, but rather things like fraud and privacy violations, disinformation, election interference, discrimination, blah, 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 all of those things. They just kind of brought all that and they were like, listen, look at all this bad stuff that has happened with Facebook. They said you should be concerned that any weakness in Facebook's risk management systems will become weaknesses in your systems that you may not be able to effectively mitigate. So basically they're saying GTFO to Visa and MasterCard, get the hell out of there. And already Visa, MasterCard, and Stripe were kind of anxious about the stuff that was happening and all the Senate hearings and the government bannings in the EU and so on and so forth. And that's why PayPal ended up leaving. So what does this mean? I mean, perfect example of, again, like, you can't really bring Bitcoin in front of the Senate. You can't question it. It just exists. And that's kind of the elephant in the room here, that corporations are trying to launch other digital currencies that they have control over, and they can just drag them into the Senate and say, what are you doing? You are or you are not allowed to do this. There's nobody really to point to when it comes to Bitcoin. I think that IRS tax stuff is the government trying to figure out a way to get a handle on stuff and actively discourage it. But the thing about this is, with the IRS stuff, is, are other countries going to step up and be like, oh yeah, we're not doing that? And then do people go and have their holdings there? Good question. We'll find out. Anyways, yeah, is Facebook Libra ever going to launch? I don't know. Dude from Brad Garlinghouse from XRP, which, why listen to him anyways, is saying like, oh, it's probably not even going to launch till like 2023. It's funny for him to be commenting and detracting a centralized shitcoin being created when he's like the king of centralized shitcoins being airdropped not airdropped, but dumped on the market. But I digress. Let's move on to one more thing here. Nearly $10 billion in Bitcoin is actually held in the wallets of only 8 crypto exchanges. Now, that sounds like a large number. It's roughly 7% of the entire circulating supply of Bitcoin. Yeah, that's large. If you put it in context, though, of world markets and something like the US dollar, just to give an idea, all money out of all like actual base money, about 92%, 93%, depending on who you talk to, is actually completely digital, which means that by virtue of how it works, it has to be in the hands of a custodian. It's sitting on the ledgers of centralized banks. So already, I mean, Bitcoin being at only 7% in the hands of custodians is kind of ridiculous. Only 8% of global money is actual physical bills and banknotes. And a lot of those are also in the hands of banks and centralized third parties. So, I mean, Bitcoin's doing pretty well. However, the trend is that it's going up. More Bitcoin is being held with these centralized third parties. And I think part of that is a symptom of how people obtain their Bitcoin. It's not as much peer-to-peer. A lot of it is through exchanges that also hold custody by default. So you fund with dollars and you transition into something like Bitcoin. And then a lot of newbies will just leave it on something like a Coinbase, which, by the way, don't use Coinbase. We're trying to, like with my company that I work for, Bull Bitcoin, we're trying to get away from that, in that, yes, you can fund an account with dollars, but the second you transition into Bitcoin, there's no way for us to hold the coins for you. You have to supply your own Bitcoin address in order to make the purchase, because we send it out right away and we never actually hold it once you've designated, yes, I'd like to purchase now. But unfortunately, most people are onboarding to platforms that are exchanges, that are full on exchanges and speculative platforms like that. And a lot of it gets left there. So will this continue to go up? Probably, because as you see things like Backed and other institutional financial instruments come online, well, those guys are going to need to be holding Bitcoin in order to settle at the end of the day. So yeah, that's on the way up. I don't know what to think about this. And again, this beckons once again back to the IRS stuff, because are these guys now liable if $10 billion worth of Bitcoin is sitting in centralized exchanges? Are they now on the hook for the B gold that came in as income back at the $480 price point? And what if they hold it? Like, are they... I don't know. And so, like, obviously they're holding it. And then do they dump that responsibility onto the people that are using their exchange, right? So like if the exchange withholds receipt of the fork from people that have accounts there, in the IRS guidance, it says that it's until the person actually has access to it if they have money on an exchange, which seems to lead down the path of, was this guidance specifically made for under the assumption that everybody is using a custodian? It kind of seems like it, which is terrible, because again, if 7% of Bitcoin is on with a custodian, that puts responsibility in the hands of 93% of the rest of all Bitcoin to figure out their shit forks and dump them as quickly as possible. It's just unrealistic. I don't know. Let me know what you think. One thing that I do like about this whole only 7% is the movement that we saw started by Trace Mayer last year, called Proof of Keys. And that's where it's a call to all Bitcoiners to, on January 3rd of every year, remove all of your Bitcoin from exchanges. Remove all of it, everything that you own, even just temporarily, to prove that you have the keys to your Bitcoin, all of your assets sitting there. And then the next day, sure, put it back if you need to have it on the exchange, if you're actively trading, whatever you're doing with it, sure. But I think it's a great movement, and it sets a precedent of not allowing for this kind of rehypothecation, or this kind of inflating the balance sheet of a bank and having fractional reserve. we need to hold people to a higher standard when we're dealing with this kind of stuff. So anyways, that's the end of my thoughts there. Oh, doozy today. There's still so much to read. Like, I've tried to parse through it as quickly as I could, but it's tough. Let me know what you thought of everything today. I know there's a ton. If you're new here, hit like, subscribe, and share. Always hit share. It's great to have more people watching these videos and commenting. I love all that stuff. If you want to help out the show, hit up the sponsors down below, Ledn, Nord, and also check out Wasabi for privacy-enhancing features of CoinJoin. I would say that's very important. I'll leave it there. Finally, if you really liked what you saw, you can always hit me up with a tip via the Lightning Network on my tippin.me page. All of that and everything I mentioned in the show is linked down below. I will see you guys tomorrow for your daily session.